All right, so jumping straight into it, kind of, I guess we're into Asia. I know, sort of like the sort of Sydney session starts sort of obviously early, but there's no volume in, so I guess it's sort of like Tokyo online in 25 minutes. That's pretty much what I call sort of Asia starting because there's just no volume from Australia. But overnight we had the FOMC, and as expected, they sort of held rates. Look, it was pretty widely sort of expected by everybody. So, I think part of these things are kind of factored in as well. The main thing you look for with these are the press conference afterwards. That's when you really see the sort of volatility. So I'll get to that in a moment and jump onto DXY. But first thing, I just want to have a look at the Aussie because this is the break that I've been, as if anybody's been watching these things, has been what I've been trading through the last sort of week and that last week, last 2 weeks, 3 weeks, however long it's actually been. It feels like it's been a while as we've been grinding these lower levels down here, but really starting to see the sort of break and push out here now, which is good. If we sort of jump down on the lower time frame, you can see the 61% offered a great entry for anybody sort of trying to sort of jump on the move. And realistic, look, pretty much if you get this like to the dot, that's like on the money, right there on the dot, and it's pushing away. And obviously, yes, this has given us our break of the sort of falling resistance. Obviously, we did this sort of last week as well, and then just got absolutely slammed down. And this is what I was saying. This is what I felt was a little bit different with it this time, is that all these other sort of areas. So through this section here. Just a little bit of a different color. Whatever, just make the blue for now. This section here, this section here, this section here. These are all incredibly hard smackdowns from this falling resistance. I mean, even if we go sort of further up, I mean, this is going back towards when the trend started, but we're sort of looking at, I mean, even this drop technically from here. I mean, that's near 3% drop off that contact and that. And I did this the other day as well. But I mean, this was probably similar. There's 3%, 2%, 1.8%. Like these are big sort of sell downs. And the fact that we didn't get quite a hard, let's get rid of all the stuff. The fact that we didn't get quite a hard sort of push down this time, and obviously subsequent sort of push through to sort of test these horizontal levels and that, I thought was very much a sort of a strong sort of bullish sign that we were getting close to moving up, or at least getting a proper sort of breakout. So not out of the woods yet, because obviously we've got a lot of these sort of horizontal levels where we know sellers are sitting. If you jump onto the daily, you can get a good view of it, because we've got all these wick areas where price hasn't sort of managed to close above. So now we're starting to put in, if we get this one out of the way, we're starting to see the highs here. So there's one, that's two, and this is a third high. We've actually got our first higher low. So this is the start of what you sort of look for with a sort of new trend. And this is how you want your trends to start as well. You want them to explode out of the gates. You don't want sort of like, oh, okay, it's broken, and then it just dribbles up, dribbles up, dribbles up. You want conviction. You want the market going, yep, bang, okay, we're going to take this higher. And what's going to help Aussie with this is obviously continued sell-off with US dollar, based on the fact that they held their rates, is firstly, from a technical standpoint, you're going to have a lot of stops around these zones. A lot of people that have been short, they wanted to drive it down to sort of 61, 60 cents, those kind of levels. They're going to start to get a little bit nervous because as long as, I mean, at the same time that sort of we're trading this long, there are people obviously that are still heavily short and have been right for the last 3 months, selling into absolutely every single push higher. And as you can see, all these highs, they all came in just that little bit lower each time. So, once you start to sort of put in the higher highs, they're going to start to sort of get a little bit nervous. So if you make this one, now we're starting to get higher highs. These sort of things, I mean, obviously this high isn't finished yet here, But if this high pushes above this previous high over here, I don't think it'll do. I think it'll sort of come up here, push back down, and then go through. I don't think it'll go through on one push, one move. But who knows? Because there's going to be a lot of stops that are going to be sort of triggered as it sort of moves back up through this level. Also, the fact that RBA's got their rate decision coming on Tuesday, the 7th. So, what's that, 4 trading sessions away? Plus, they're heavily tipped to raise rates, albeit only probably sort of 0.25% or 25 basis points. But that is what the markets are looking for. They're looking for increase in rates, and that's the bread and butter. That's the golden thing. All the other bits of news are just little bits that sort of feed into that idea of what the central bank are going to do. And you had the International Monetary Fund sort of putting in their 2 cents and 2 cents about it as well. And they were sort of saying that, look, this is inflation's still sticky. You need to do something about this. I mean, that doesn't tell the RBA what to do, but they've been talking with them apparently. And that is obviously going to weigh into this factor a little bit as well. So you've got quite a few things sort of saying that, yeah, Aussie or the RBA are going to raise. You're seeing the Aussie appreciate. And this is what Aussie needs to get back up towards these price levels is a two-pronged approach. They need to be doing something on the home front, i.e. sort of raising rates themselves. And also they need a pause or a slowdown of the rates and the sort of drive to US dollar. I mean, through this whole sort of period of like the Middle East conflict, which is, I don't know, week 3, week 4 or something now, US dollar hasn't done much. Like, as I say, I'll jump onto DXY next, but it hasn't done much. It's really just, it's more or less just gone sideways. Like it's had its flare ups and flare downs, but like, that's just typical price action for it. It's not like you haven't seen these massive breakouts. Like the Swiss franc and gold have been the number one winners. Yen could have been, but of course the BOJ are just uninterested in doing anything to protect the yen's strength. They sold it down quite heavily like a couple of weeks ago with an intervention. But this time they seem to sort of not do anything. And as well, they sort of, I thought just on a side note, with the BOJ, they sort of said that they were going to not make any comment on their rate decision afterwards. Well, after the decision, they're not going to make any comment. But prior to the decision, they said that. And it's sort of like, well, they're obviously sort of don't want to field any of these kind of questions of like, how can you still be doing this? So it was a pretty much writing on the wall that, or a little bit of a signal there that they were going to sort of do what is obviously a bit of an odd choice, which is to maintain and hold when the yen has been absolutely slaughtered to, multi-year lows. I think 30 years or something, I think it was, a 30-year low or something like this. I don't know. I don't trade the yen a great deal, but, obviously you're always paying attention of these sort of bits of news because the money's flowing around somewhere. Anyway, back to the Aussie. Yeah, so definitely getting this nice breakout on the daily. RSI's got room to move. We're seeing it sort of push up. I'm expecting in the short term come up and test this sort of mid-30s level. That seems like a decent area where we can sort of say that, look, we've seen the sellers recently. Well, recently, and this is going back. Oh, it's not too bad. It's the 11th. So 3 weeks ago, we had sellers around this level. I think this was a little head and shoulders, actually, if I sort of remember correctly. Yeah, see, this is our little head and shoulders area. Unable to break through, unable to break through. Now we've broken through, bang. We look where have the sellers been apart from this. So if you get down on the 1 hour, you can say, okay, maybe 25 might offer a bit of a sort of lower time frame resistance. But, I mean, realistically, I think up around this zone here, you've got sellers, sellers, sellers. I think this is a good place for it to sort of stop, take a little bit of a breather, and then sort of look to sort of push on for the next leg up. So up along here, I don't imagine the pullback's going to be too drastic. I don't think this is going to be like, okay, now we've sort of seen these sell-offs. The time for these big sell-offs, I think, has passed, at least in the short term. I think we're going to see some shallow pullbacks here, grab some more liquidity, and then we're going to push up to these next levels. And I think this is going to keep happening. Obviously, my first price target's well up into the 65s. I think above all these highs, we're going to have liquidity that needs to be snapped out. all these people that have sort of been short, they're sort of going to be starting to go, oh, okay, they're seeing this as well. As I said, they're going to be going, okay, Jesus, is it going to go higher? Is it going to go higher? And they're going to have their stops above these levels. So I think that certainly this is could be the start of a medium term, at least correctional sort of channel. So we're going to have to sort of wait till we sort of get a bit of a pullback before we can sort of link these highs together to sort of see where we might be going. We could be looking at a channel along these lines here. I mean, that seems a very reasonable sort of expectation in the short term. If we say this point sort of pushes up here, I mean, look, this could come back down to here. You know what I mean? It could come back down to 64. It would make sense to get a retest of the top side of this sort of support, resistance, because we can see here, even when it first came up here, it tried to go for it again, just like it had previously. But obviously, buyers are just happy to go, okay, fine, take the pullback and then bang, reload and shoot through. So, you know, it would make sense that you would get a back test of this zone at some level. So, you know, going to 35 back down to 40, that could sweep out a couple. But I would say that we could potentially, based on the low down here, this low coming through here, I mean, that's a smaller touch, but kind of all lining up there as well. You can't really sort of say that you could say, okay, maybe there's a midway range through here. So again, like if you want a shorter pullback, you could be looking at something like this, because this would line up with potentially what would have been this sort of smaller little channel that it was trying to form, and then it's broken into the top half of the channel. So I think a bit of a cool off around the mid 30s. Pullback, I don't think you'll get a pullback down to here, but I mean, who knows? Aussie, oh, they love to sell Aussie. When they sell Aussie, they love to sell it. So it could get a pullback down to 64. 64.12 would be a sort of a reasonable, obviously depending on how long it takes to get to these points. But then I think it's certainly a push up there towards 65 towards the end of the week. Again, you got to remember the RBA is expected to sort of raise rates on Tuesday. So whether they do or don't, the market is expecting this, and the market is going to price accordingly for it. Aussie has been beaten down for such a long time while they've just held rates. So I think there's going to be a little bit of a sort of a positioning in that sort of being taken by the market on a broader sense before they get to that rate decision. And obviously when they raise it, well, that's confirmation. That's great. If they don't, well, you'll see a quick unwind of those positions that are taken over the next couple of days coming into it. DXY, oof, that's an ugly gap down. If you've sort of followed a lot of my sort of things and that, I always sort of say that, you know, DXY loves to follow its gaps. That's a pretty big, that's a 16 point drop off for its gap. So typically we've been seeing these tiny little gaps, like, you know, 2 or 3 points. But this is just sort of really sort of confirming that people are happy to sort of bail away from the US dollar. So, you know, with this kind of thing, now we're sort of seeing it. I mean, this sort of a period here, for some reason, 10:45 it comes online, so 15 minutes prior to Tokyo opening. Obviously, this has given us our sort of gap now. So if we sort of whack here and here, so that's our gap. So we could see a little bit of a push up. I mean, generally you expect these things to sort of to close, and then a sort of continuation of the trend. With such a gap, I wouldn't be surprised if we get a little bit of a dribble down first before an attempt to rally up to it all. So, you know, I mean, obviously sort of like for them to gap it down this size, as I said, these are the size of the gaps we normally see intraday, like 2 or 3 points. Like they're tiny, they're minuscule, particularly the last couple of weeks in that. You know, we've got this on here, it's like 3 or 4. So, you know, having a sort of 15-point gap is about 5 times bigger than what they normally expect to see. So yeah, it's people are obviously sort of saying, and this is the thing, sort of like they held the rates, so you know people are looking for better return elsewhere, other currencies. Aussie, this is going to be one of the sort of number one appreciators of this. I know Aussie's not part of the DXY, but it's a broader sense of the US dollar against the whole market, and that's what we're sort of looking for. So coming down here, bottom side with it all, really depends how done the market is with their sort of positions. So I mean, this is the move from the other day. Just got to address this one quickly, because obviously we got the initial push up and was trying to come down off this little channel was making, came down underneath what we had sort of marked out as the support. Again, 61%. this is what I've said with DXY, it can have incredibly deep pullbacks and still somewhat remain intact. Like because obviously then it took out the new highs. Obviously now it's failing, but still nevertheless, that this was the move up 61%, and that exploded off. So DXY does love super deep pullbacks even within a trend. So yeah, we just have to sort of wait to see what they do here, and we're seeing a slight little push down. But again, this is super early days, so yeah, this could do anything. But I expect a little bit of a drop down here, and then a quick sort of subsequent sort of rally. These will give us our sort of pushbacks on Aussie as well. But main sort of levels, I guess I'd be looking for again, sort of down. You really like. I want to sort of confirm it a bit more than just sort of saying, oh, a couple of pips this way, a couple of pips that way, because it cut through this area. It cut through this area. So if we sort of say, okay, around, pop a little smaller zone here. So these kind of things, this could be providing a little bit of a launch pad to get that rally, close the gap, and then sort of come back down further. So I'll clear this up a little bit because we're not looking at those. Oh. Actually, we can get rid of this one now as well. So I think that if we can get down underneath this, what's this, 106.40 zone, which was the previous highs here, I've said this a few times, but you got to look at how fast it's moved. It went from here, unimpeded, here, unimpeded, here, unimpeded. So what's the likelihood if it does break this, that again, it goes boom, unimpeded? Like it would sort of make sense. It's not this sort of like choppy area here, which is then replicated with some choppy area here. It's a very sort of straight cut. Like it is a good example here that, you know, prices just come straight down through here. Once it got past there, straight back up there. So this is what we want. We want to see that sort of repeat of that sort of price action. So I think sort of underneath here. Alert. Okay. So medium-term support. So this is the next level that we'll sort of be looking for it to push under. Ultimately, again, still underneath this 105, 105.6, sorry, 105.60, 105.70, and then obviously taking out last week's lows is the main goal for confirmation of downside move for DXY. Till it can do that, you're still in the mercy of it sort of realistically with this sort of grind along sideways. But obviously, FOMC was the big one that the market was waiting for. That sort of seems to have sort of obviously, well, it has come and passed, and you know, they've seen that they're not going to sort of put the rates there. So you may be seeing a bit of a push. Look, on a fundamental level, it could still sort of be seeing that people are looking for safe havens, but US dollar just doesn't seem to be offering that, not compared to the other one. So I'd expect you to sort of see a little bit of a flows out of this, just sort of like balancing out some of the crosses, but also with gold as well, because I imagine that sort of like, you know, gold got that little sweep smack down from from the 2000 level. Seems to have found a little bit of support now. So if we see a continued sell-off with US dollar, I think we'll be resuming a little bit more of their sort of inverse relationship, because they've been running very in sync. Well, not in sync, but like, because obviously gold's been running through the roof and US dollar's been sort of holding flat. But typically you would expect the inverse of that. So if gold was running this hard, you'd expect US dollar to be sold off. But US dollar's been sort of holding. So now that sort of US dollar is selling off, I'd expect those flows to move into other safe havens, into the other crosses, but I'd expect to see gold sort of move up a little bit. So short term, I expect this little sort of push down here. Let's change this around a little bit. So I imagine, actually I'll have to sort of get rid of this one here. I do expect this gap to close like they always seem to, but I'd say a short little push down, then possibly a push up, and then push down like this. And this will sort of go in line when you look at things. I know this is Aussie isn't part of DXY, but as a broad sense of US dollar strength, this will give us that sort of move of that retracement with the Aussie and then the push back down. And that's that cross chart sort of confluence. Cool. All right, pop over to gold. So yeah, we're sort of seeing a little bit of the support as I sort of come in after last up, like a pretty heavy sort of shakeout. So like obviously I was looking down. I mean, this is perfect world if I could get it down 1950s, and it could still come. I mean, you know, if we sort of have a look at sort of where the trend lines are here, you know, there's a higher low, sorry, lower high sort of coming up here. So top side, look, if we sort of drag this across here, this is also interesting. That you can see that price was supported here, supported, and became its new resistance here. So again, I think if we can sort of recapture the top side of call it sort of 1993. Yeah, top side of 1993, I expect us to regain this sort of range through this zone here. So let's grab a couple of these out of the way for now, just to make it a bit easier to read. But still, we're seeing a little bit, maybe a little bit of a wedge sort of forming here as well. It seems to have supported this this move this line quite a few times, which is good because if it does decide to sort of sell down for another leg down, we know a pretty reasonable area where we might expect it to hit. So, you know, if it's held this line a couple of times, there's a good chance that we could see a push down here and then push back up to the top side here. So at the moment, it seems certainly to be sort of shoring up this little wedge, and wedges are sort of a positive break to move higher. But of course, you know, you need to confirm it. You need to see it with the flows. So we want to see sort of above sort of 93, and then I imagine that we'd get another push up above 2000. So an alert in there. Yeah, so 93 short-term price target will be 2000. We are sort of seeing, look, and this is another little one, if we sort of drag this out, we're seeing, look at this, as a bit of a divergence here as well. So what are we on? This is okay. So it's just on the 1 hour, but, you know, these things are still happening. So let's make that white. Boom. So these lows here is this low here down to this next one here, which is this one here. So again, these are the negative divergences. We're seeing the price is pushing down while the buying is not sort of replicated or showing the same sort of flow. So obviously there you've seen the reaction, and it's bang, it's shot back up. So this doesn't guarantee that the move is going to go a lot higher, because obviously we're coming into this sort of falling resistance here now, but it does show that that's the negative divergence, which obviously you can see the reaction, bang, it sort of pushed up. So we're selling down off not a lot of conviction, which means the buys are there. And you can see these lower areas here. That's why I say gold loves to sort of sweep these sort of textbook areas. As you can see here, textbook area, swept it, and then bang, back up. Textbook area, underneath the wick, bang, swept it, back up. So if we do come back down here again, you sort of start to look, okay, what might they be doing there? They'd be looking for the next sort of low, which is this one over here, would come down here. Maybe, I don't know, that'd be a pretty sort of big drop off down here, 62. If I could get it down here, I'd buy a bundle. But I think certainly, yeah, above. I'm looking more sort of short term for a break of this level here, particularly with the US dollar potentially selling off a little bit here. All right, cool. And moving on, we've got copper. Copper's actually, he's doing okay. He's not completely full conviction to break out of this zone, but it's certainly hugging the top area here. So this is your resistance. Put it onto the 4 at least. Here's your resistance, here's your back test, and it's hugging this area here. It's a bit of a rounded bottom in the short term here, pushing up. So again, US dollar sells off. I think people are going to be a little bit more pumped to take on a bit more risk. We're going to see Aussie appreciate, we're going to see copper appreciate, and as copper appreciates, we're going to see sort of that obviously bolster the Aussie as well. So for the short term, we just want to get above these sort of wicks. We've got the alert still set to take out the wicks of that first break, which is great. And I expect this to sort of, look, it's given time for the RSI to sort of cool off a little bit. regather a little bit of liquidity, and bang, it looks like to be pushing back up here again. Copper, obviously, of late has been super grindy. Like, if you look at these sort of nice trending moves that we were trading previously, these things were breaking, they were just moving in a nice trend. This has just been a sideways grind. So up into this range, the ultimate range that I think we're going to be looking at in the short term is going to be this sort of, 380 and 369, high 369s. I think that's a fairly accurate area of where we're going to start to see it in a horizontal sort of range. And finally, just with China, China still grinding, but you can see what happened when it came into this top area here. Clipped it by almost like, you can't even see it honestly. If you can see it on the lower time frames, within like what's it like, sort of half a cent or something, 1 cent. And obviously the market's agreeing and saying, yep, that's the level. Let's start to sell it down. Bang, bang, bang. This little short-term trend that it was more or less holding, look better probably on the 4 hour, might show it a little bit better. We're starting to see that break now as well. Again, this is coming with a broader sort of US dollar sell-off. So even though one is a part of the DXY, it's just that the US dollar is sort of selling off against a couple of other sort of all the other assets. So as this pushes down, we're going to see one strengthen up. We're going to see the flows of that come on with copper, and we're going to see that help the Aussie push along as well. So we're starting to see this sort of come down chunky now. We'd like to see a 4 hour candle, which has still got 1 hour left on it, come down here. This is the short-term supports. We can drag up here and close under these supports are the levels that we're sort of looking for in the short term. And then obviously the grey, and then this major test up down here. But I would imagine we're going to see a bit of a continued sell-off. Just as I say this as well, we're seeing Aussie push up a little bit higher, coming up towards this first sort of, as I said, 64.30 zone. I imagine this is where we'll see a little bit of a sort of pushback with DXY. As we can see, yep, so DXY. See, this is what the cross-chart confluence is. It's all happening. It's not just sort of one thing breaking, one thing moving. You're seeing everything relate across to it all. So a bit of a pushback up from this zone, I wouldn't be surprised. That'll give it sort of Aussie a bit of an area to sort of book some profits, come back up here, grab liquidity, and as you can see, as I say, DXY is pushing back up off this zone, almost again to the cent. Anyway, that's it from me this morning.